We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up Lrcx. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle. Spike up to that high, so that market could be tagging that midpoint of the second and third last candle. Current price is sitting at 518.55. So if price works its way up to the highest high of that area, which would be green and red of structure, it can tag the numbers of 717.87. If price drops down from current price, it can tag the lowest area of that red and green, which would be tagging that within that second last candle, or the bottom of that second last candle, which would be near the numbers of 423.016. And if price pushes up from this area here before tagging 717, it can tag the midpoint of the structure that we just created, and that look like it's near the price action top of that wick, near the top of that wick, which would be the midpoint of the second last candle and some of that third, which would be landing at the numbers of 578.12. So let's take a look at what's going on in the market. So we can see that price action is a bullish green candle. It did look like it tagged. So if we took the midpoint of the second of that SR line and we put a zone in that area, what it looks like it's doing is that price action has pushed up to an overall high, came back to retest, created the support, went up to the midpoint, and now we have to see what's going to happen. So when price action made it to the midpoint, it only tagged that midpoint area. So just because it tagged, if it does break up, you'll see the market pushes up from this level. So identify as the market pushed up in green, came back to retest. So that retest with the second last candle consists of the first leg, market pushed up for that second. If it continues with bullish green candles, we'll see that break of that market, may or may not see a retest on the midpoint of that zone. So let's say the retest does happen and then the market pushes up. So midpoint primarily always happens. Sometimes it doesn't. If it does, it's going to come back to retest those previous levels where it did not retest that, so it's going to come back down. So that's where we'll see that W formation, that market works its way up. But if that market declined at the midpoint of the second and third last candle of the market, it'll identify coming up in green with the third last candle is the first leg, the retest is the second leg. Price action came back to retest the midpoint of the second, third last candle, which created the third leg. And if it follows up with the bearish red candle, because it can consolidate a little bit sideways, but let's say if it drops down with the bearish red candle and engulf the current price action candle and pushes down, we'll see that M formation in there. So we'll be looking for the market to close out for that information, waiting for the break and retest to see if that market's going to drop down further. And if it does drop down further, it can also still create some momentum within or below the second last candle wick, and that'll be like near the numbers of 308.19. As I said before, or we can receive that consolidation within that second level lows, midpoint, overall higher structure, overall lower structure, I should say overall higher structure, and low of the second last candle in the market. Working our way down to the 6-month time frame. So price action 6-month time frame is reading as a bullish green candle. Second last candle is a retest, which is more a doji style candle. So what happened is we can see that market spiked up, pushed up, came down with the bearish red candle, consolidated sideways, and it came back to tag that area. So if we look for those formations, is coming down in red for that first leg. We're waiting for to see if it's going to receive a break with another bullish green candle, and then we look for the retest for that formation of that W. If it's denied on the 6-month time frame, let's talk about it in a 3-month time frame. If it's denied at the 3-month time frame, then it will be identifying that it did tag the zone area, and it can be working its way down if the price action on a 3-month time frame is currently a bearish red doji cross or doji, and it's consolidating sideways. So if the market drops down from this area or pushes up, then that means we're looking for the engulfment towards the second last candle, towards that upside or towards that downside. So far, if you ask what price is coming from, it's coming from the high. What pattern is received at the high? We do have that first, second, third, fourth. So on the 3-month time frame, it's reading as a double top. Market pushed down, closed out the M formation, came back to retest the double top, and now we're looking to see what's happening. So far, we have price action side by side within that second last candle. So we are in that consolidation, but if it breaks out, it'll identify as the market pushed up, came back to retest for that first, second, third, and it'll push up for the fourth leg. And if it's denied, we'll see that market pushes down, what creates the first, second, third, fourth double top, retest, and market broke through. Working our way to the monthly time frame, price action monthly time frame, bearish red doji side by side with the price second, third, raised up above the fourth. So think about the fourth to last candle being some type of stability, and the market spiked up from that low. So like a head and shoulders pattern with a double retest. So think about it as a left shoulder, a head, right shoulder, and the market spiked up to when. So it broke above basically the double bottom or the double bottom of the retest or the head and shoulders pattern, and it spiked up above it and just consolidated sideways on this level. So we're going to see if it's going to drop back down or if it's going to work its way through the zone, or at least go into the zone before breaking out to the top of that zone line. So now we're on the weekly time frame. So price action weekly time frame reading as a bullish green candle. We do have the last few candles within each other: price second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th, 12th, 13th. Primarily the 13th candle in the market is we waiting for that breakout. So within this area here, this is the market that's creating that pattern. So if we look at the low, if we pull out screen back, lowest low, red and green, created that support. We still see that head and shoulders pattern, left shoulder, head, right shoulder, market pushed up, went to another level, and now we have a double bottom of that first, overall second and third, and the market could push up and create that double bottom. So price action is retesting the head and shoulders pattern on that double bottom, currently at a double bottom. So we're going to see if that market is going to push and break out. But that price action candle is reading as a spike up to the high, just like the second, third, fourth, 15th candle in the market. So the 15th candle in the market, the price action candle is push up to the high, spike up to the high. So it tags something in this area. So we're going to see if it's going to still follow with the bullish green candles before it finish, until it's finished consolidating. Now walking down to the daily time frame. So we're going to make this a lot tighter so we can see what's happening. Daily time frame, price action bearish red candle within the second last candle, spike up to the high. So that market just tagged the area of a high, midpoint, low. We see the W's, first, second, third, fourth, retest one. So we have a double bottom and a retest, retesting that above that midpoint level, more like second level highs if you want to add it in. And then we're going to see if that market's going to push up, work its way down, consolidate. So what we're going to do now is we're going to take that second last candle to market, and we're going to grab the highest area of that wick, which would be near the numbers of 536.63, and we're going to turn that to the color green, and we're going to go towards the bottom, and we're going to grab the bottom of that second last candle, and we're going to turn that to red, and we're going to walk down the time frame to see what's happening or what happened within that candles today. So within the last 4 hours, in the 4-hour time frame, price action has consolidated within the zone of the daily time frame. So we're still looking for a breakout. So far it's consolidating. So it's reading as market spiked up, came back to retest, headed down to 3, 2, 1. And while we're walking down these time frames, you can see a pattern that's being formed. So now we see some type of double top of first, second, third, fourth retest. We can see that market's trying to work its way back down. Look like an overall break and retest. 15-minute time frame, market still consolidating within that area.